Hi everyone, this is Paul Lange from Disciplined Trading Strategies with this week's Trade of the Week video. This is for the week ending 11/7 of 2021. The stock was Z. This happened on Wednesday the 3rd. This is based on a Tier 3 gap entry on a 2-minute DTS buy setup failure. I'll explain what that means in just a minute. Management simple, reward to risk about 3.7 to 1. Before we get to that trade, as usual, what's going on this week for free DTS members? It's the bi-weekly scanning night on Monday. Take a look at the note down here about the DTS LTT. You can read that on your own. Here is the daily chart for Z. And what's going to happen on this morning is we're going to see a gap down to right about there. Now, this is based on a gap. This is not a great gap. I have to explain that. This is a Tier 3 gap. Tier 3 gaps do not mean that they don't move a lot. They're not bad quality in that respect. It just means that because of the pattern, the entry may be unclear. It could be early in the morning. It could be 2 days later. It's hard to tell sometimes. This was not a great quality gap, and I did not look to enter it early. It turned out it could have been. The reason I had this on a top watch list was because you have to be observant in the market. Part of what we do is to notice little things that happen. And it has been the case we've been in a very much of a momentum type market. And stocks that gap down have had a greater tendency to fall greater amounts than usual over the last few months. So I've had a special preference toward things that gap down, even if the pattern's not one of my favorite. So I put this on the list and watched it, but was not going to enter it early. So we ended up gapping down to here, and as you can tell, it put in a really nice big red bar that day, which was very nice. This is the hourly chart. There's not much to learn from here other than the fact that it wasn't the best of gaps because that prior day had a big red bar as well. But it worked, as I explained, because a lot of the gap downs get momentum to the downside regardless. When they get sold, they get sold. I ended up entering right about there. You can't tell much on that 60-minute chart, so let's go next to the 5-minute chart. 5-minute chart, you can see the size of the gap in there. And that's where we opened. And it turned out that you could have shorted those opening failed attempts to go higher, but I didn't feel confident with it because of the quality of the gap. As a matter of fact, I just had it on a chart and wasn't paying all that much attention to it because as it started to drop, I said, well, I just kind of missed it. I guess it's going to go lower, but I'll have to do something else. But then I looked over at my screen, and on this rally back, I started paying attention to it. And then it gave an entry that the only way I can phrase it is I couldn't stand the thought of not taking it. To take an excerpt from my favorite quote, and ended up entering right there under 71.00 with a stop over 72.00. Target 1 on that decline right there, and target 2 as it accelerated lower, thinking that might be the low of the day. And then target 3 I trailed out there. You notice I didn't even try to go end of the day with this because of the quality of the gap. I wasn't real sure we would continue to drop. And even down here, I would have bet a nickel that was the low of the day. So it's amazing it kept going. So I'm not embarrassed of the targets I took. I think they're good targets. I could have got a little bit lower, but I think the target taking was perfect on this. This last one could have gone end of day, but I trailed out. You can see why right there. It started to pop. Ended up going nowhere, but I think the management was as good as I would expect for this type of gap. The 2-minute chart will give you a little better concept of the entry that I said I couldn't help but to take. There's that decline we had, and then we fall and we rally back. Then this is the little rally that kind of is the inflection point where you kind of know you got the stock trapped now, because we had this rally, it tries to bounce, and if this bounce doesn't hold, that's what that means by having a buy setup failure. Failure patterns are the most reliable entries you could ever have. If you don't use them or understand them, you need to kind of figure them out because buy setups are not very reliable. But failures of buy setups, when they're in the desired direction, are golden. So entry right there, and then you can see target 1 and target 2 and target 3 are off this chart because it is only a 2-minute chart. Note also, that was a pretty late entry for me. I generally am done trading between 10:30 and 11, so I kind of was hanging around for this one as I saw it bouncing in there and just caught that around 11 o'clock. For those of you who like trades like this, come join us in the DTS Trading Room. Every member gets a watch list ahead of time that's a synthesis of a whole lot of stocks I look at, and then we go through and pick out our favorites before the market opens. Everybody understands what I'm looking at, what the favorites are, and they're pretty much generally all very tradable stocks if you want to play along. If you want to join us, hop over to the DTS website and figure out how to do that. This is Paul for DTS. Good trading, everybody.